So we're in a place now where you could call it a death spiral of the fiat currency experiment, in which there's nothing left for the world's central banks to do that'll fix things.
The past 15 years has been one of excess and potentially the greatest wealth creation opportunity ever. While stocks and other assets markets have continued to go to record highs almost, it seems like, every single year, uh, it does seem like there's been an overextension of leverage as well. And that's just meant that the debt has continued to pile up, not only in markets and the economy and governments all over the world, basically. Even when it gets to unsustainable levels where everyone thinks it's going to collapse, it just seems to keep on growing and growing and growing. This massive money bubble, you could say. So on today's episode, I'm happy to be speaking with John Rubino, who's was the founder of the dollarcollapse.com. He's the author and co-author of 5 books on the economy, and he's also recently released a new Substack. So John, thanks for joining the podcast today.
Hey, Anthony, it's good to meet you. Thanks for having me on.
You're welcome. Yeah, it's nice to have you on too. So yeah, as I was saying, it just seems like there's this basically the system that we have is unsustainable and it's created. And I think this is something that you've said. It's like sort of like this money bubble, and it's going to get to the point where basically our financial system will implode on itself. So I'm not sure if you can talk more about this hypothesis and maybe where it came from.
Yeah, and let me say up front, I totally agree that it's in the process of collapsing now. We're very close to the end of this whole experiment. And to understand the experiment that we've been trying, you can go back to 1971 when we took the global economy off of the last vestiges of the gold standard. And from that moment on, all the major currencies of the world were what is called fiat currencies. They exist by government order or fiat and aren't backed by anything. So this gave the world's governments basically unlimited credit cards that they could max out at their leisure. And of course, elected officials and bureaucrats, being what they are, they kind of went a little crazy with those unlimited credit cards. And so we get what we have today is a world that's awash in debt. Everybody is wildly over leveraged, from governments to corporations to individuals. And the only way we can keep going is by continually increasing the amount of currency that's in the system. But of course, that causes inflation, which is forcing up interest rates. So we're in a place now where you could call it a death spiral of the fiat currency experiment, in which there's nothing left for the world's central banks to do that'll fix things. Because if they try to deal with inflation by raising interest rates, that raises everyone's interest expense. Everybody who borrowed massive amounts of money at 0 or negative rates in the last decade have to have their debt rolled over, but at much higher rates now. So their interest costs go up, which means they have to borrow even more money, which means their interest costs go up even more. So raising interest rates puts us on that track of the death spiral. But trying to manage the the explosion of bad debt by pushing interest rates back down, as we've already found out, will send us back into a cost spiral where the cost of living just goes through the roof for everyone, which will destroy the value of all of these currencies. The dollar, even though people think of it as a strong currency, lost 10% of its purchasing power last year. And that will continue if we try to go back to low interest rates. So we're in a place now where the experiment has basically reached its end, and it's unfortunate end because it didn't work. And now we have to figure out what to do next. Which crisis are we going to choose? Are we going to go into a hyperinflation, or are we going to enter a 1930 style deflationary crash? And that's basically it. Those are our choices as the monetary system breaks down. So this year it's going to be very interesting, because this is when we make those choices, when we decide which one we're going to do. And so all eyes are on the Federal Reserve now, because they'll be making the big decisions going forward. And it's not really clear what they'll choose, because either one is a catastrophe. And they don't understand why it's happening, because they've, they lived their lives following flawed models, which no longer work. So they're lost. They're lost in the woods. They don't know what to do. And because of that, we have no idea what exactly they'll do. But we know it will be wrong on a fundamental level, that it will cause a crisis. We just don't know which kind of crisis.
Yeah, it's interesting. So if we mention what you said there, either a deflationary, I guess, spiral or a hyperinflation spiral upwards, would you say that if the Fed were to continue doing what they're doing at the moment, continuing to raise into the current economic situation, that would probably bring out around like a 1929 situation? And then if they maybe took their foot off the gas and even pivoted, that would do the opposite and bring around hyperinflation? Is that sort of what you're
Yes,
thinking?
yeah. From where we are right now, we're very close to entering one of those two states. And the interest rate increases that they've imposed already, which just took us back to kind of normal levels of interest rates historically, are already breaking the system. Like if you look at housing in the U.S., it's a rapidly evolving catastrophe. Home sales have plunged because prior to the increase in interest rates, home prices had just gone to crazy levels, much, much higher than had been the case in the previous housing bubble in the 2000s. So houses were already unaffordable. Then the Fed comes in and raises interest rates, which doubled mortgage rates from like 2.75% at the low on a 30-year fixed rate mortgage to almost 7% right now, which makes the monthly payment on houses almost twice what they were 2 years ago when they were already unaffordable for most people. So U.S. housing is tanking basically. Sales are way down, and prices haven't started to follow yet, but they will. Sales tend to lead prices, so we're going to see a huge drop in the value of our housing stock, which is financially a big deal, but also psychologically a big deal in the U.S. People depend for their self-image on the value of their house. And if the house drops from 2 million to 1.2 million, then all of a sudden they're going to not take that exotic vacation next year. They're not going to upgrade to the next Tesla model or whatever. And spending plunges. They call that the wealth effect, but it's the reverse wealth effect when your wealth drops and therefore your spending drops. And that, we're looking at that in a huge way going forward because of housing, but also a lot of other things going on in the economy. So we got a recession, in other words, ahead of us in 2023. And the question is, will it be a deep, nasty recession that causes the Fed to shift gears and start cutting interest rates, or will it be mild enough that the Fed can continue to focus on inflation, raise interest rates even more, and then really break something out there? So again, it's a mess no matter what, but we just have to figure out what kind of a mess it is in order to invest correctly for it.
Yeah, it's interesting. So either I was going to say either it's a debt crisis or a currency crisis, but then I guess if we see that depression, what would that create? Would that be the debt crisis potentially?
Well, yeah, the 1930s version of this would be a debt crisis where we get rid of our debt, but we do it via bankruptcy and default. In other words, people can't pay, so they don't pay, and then all that debt just goes away. But in the process, tens of millions of people get thrown out of work. Huge numbers of big companies go bust, and the system drops into something that may not be fixable, because the Great Depression was a 10-year long problem, and we only came out of it when World War II happened, and we had to ramp up government spending so dramatically. The difference being now, governments are already wildly overspending, so for them to go into a World War III scenario to pull us out of a depression would just take us right back into a hyperinflation. So yeah, out there at some point in the not too distant future, some kind of a monetary reset when everything breaks and we set up a different monetary system, and we've done that multiple times throughout history. So it's not uncharted territory, but the pain that will be felt has to be allocated somehow, and there are political consequences. So we'll get political chaos before we have the monetary reset, probably. But again, that's all out there. We're going to live through a decade that will occupy big chapters of future history books, and a lot of the analysis will be, my God, what were those people thinking? How could they have been so stupid and so short-sighted to let this happen. And that's where we are. We're living through that piece of history, and the people in charge are making catastrophic mistakes without a real understanding of what they're doing.
Yeah, interesting. So I guess if you can compare any now to any period in history, I guess in terms of the debt, the amount of debt, you could compare it to after World War II, where most countries had very high debts, especially throughout Europe and Japan and other countries like that. So do you think there's a way that they could potentially, obviously there's high inflation after World War II, they could inflate that debt away and then get it under control, or you think there's no way that once the genie's out of the bottle, there's no way of getting it back in?
Well, you can't actually inflate debt away, because to do that, so let's say you push interest rates down, and that leads to rising prices, which other things being equal would make the debt that you're paying off less onerous, right? Because the currency is less valuable. So you're paying your debts off in depreciated currency. But when that kind of an environment takes hold and people realize that the currency is going to get less valuable year after year, what do? The logical thing is to borrow as much as possible, and then assume you're going to pay it off in cheaper currency in the future. So trying to inflate away your debt actually leads to more debt, which is what has been happening over the last few years. We pushed interest rates down to manage our debts, but we got a massive increase in new borrowing, new credit creation, because everybody looked at negative 0.5% interest rates and said, wow, that's free money. I'm going to get me some of that, and so the amount of debt in the system has exploded, which means we did not inflate anything away. We actually made the problem worse. And we're really not anything like we were after World War II, because yes, governments took on a lot of debt in order to fund this existentially important war. But the rest of society deleveraged massively, because they all, had gone bankrupt in the 1930s. So private debt went away. So yeah, there was a big spike in government debt leading into, say, 1945, but total societal debt was actually pretty modest. So it was very easy to keep interest rates low, rev up the economy, generate lots of tax revenue, and pay off the debts in the 1950s and 60s. We don't have anything like that now. There is no solution now that allows us to do something like that. We can't spike interest rates like they did in the 1970s in order to stop inflation, because that will bankrupt the global financial system. We can't lower interest rates in order to manage all the debt that we've taken on, because that will rev up inflation. So there's really there's no solution to this that gets us back to normal organic growth that can be sustained. We're in an unsustainable place, and therefore it won't be sustained. What can't go on won't go on. And that's where we are. So none of this is fixable. None of it's really avoidable. It's going to happen as it happens. So for an individual, for you and I, what we have to figure out is, how do we invest for it? How do we structure our lives to protect our families as best we can? And that is a really interesting intellectual challenge, because you can do it. You can actually do something about your financial situation, whereas you can't fix the coming World War III, if that's what's coming, or you can't fix the amount of debt that's being taken on by governments all around. You can't do anything about that, and your vote does not matter in terms of those things. But you can decide what to do with your money, and what to do with your job and your community. And those are the things we should be focusing on, I think. And that's in some ways kind of a hopeful outlook, because it allows you to focus on the things that you can control and maybe improve. And that, that steers your mind away from the darkness that is the global situation right now.
Yeah, it's definitely it makes it hard to sleep at night. So I'm not sure if you heard about the dollar milkshake effect, where it's sort of saying that during a crisis, what would actually happen is a lot of the liquidity would go into the US dollar, and then that would increase the value of the US dollar in the shorter term, at least. So we saw that sort of during COVID, when there was this massive strengthening when everyone was trying to get into this so-called safe asset. So do you think that would be something that would potentially happen before the implosion, or do you disagree with that thinking? What's your thoughts?
That's kind of, it's a real thing because the US is in bad shape, but a lot of the rest of the world is in worse shape. So we have this ironic situation now where when there's trouble in the world, even if we cause the trouble, it causes capital to flow into the US and pushes the value of the dollar up relative to these other currencies. It doesn't make the dollar a more valuable currency in real terms. The dollar lost 10% of its value last year. It plunged in value. It became a much weaker currency in 2022. But it went up versus the euro and the yen and pound sterling because those currencies are managed even more badly than the dollar is. So yeah, that's the milkshake theory basically, but that a financial crisis sucks capital out of the rest of the world and into the US. And that's the kind of thing that can continue. But you have to keep in mind that all of these currencies are headed for their intrinsic value, which is zero, but they're just headed that way at differing rates. So some other currency, like the yen, is a pretty good candidate for a sudden plunge down to next to zero, because the Japanese government is so deeply in debt. They have taken on more debt per capita than any other government in human history, I think. And they're finding that they can't control their interest rates now, which is going to bankrupt them. If they have to pay more and more to borrow, the government will go bankrupt, which would be very bad for the yen. So the yen will plunge, possibly, and it'll plunge versus the dollar, as well as versus, things you can buy with yen. And that'll make the dollar look strong. But the dollar won't be strong. It'll still be losing a lot of value. It'll just be losing value more slowly than the yen is. So you have to keep in mind that there are two ways of valuing a currency. One is relative to other currencies, which is totally false. It gives you a totally false picture when they're all falling. And the other way is to measure purchasing power. In other words, what can you buy with that currency? And that's accurate. And in that framework, the dollar is still falling dramatically in value and will continue to do so irregularly until it gets close enough to zero that we have to have some kind of monetary reset and go to another currency regime. Yes, the dollar is relatively strong, but only because the rest of the world is in such a horrendous mess right now.
Interesting. And let's say if the Japanese yen would, as you said, go down to zero due to the debt issues they have, and they're not the only country that have those issues. Do you think it would be quite a short period when the US dollar strengthens really quickly? But as you said there's almost this then realization that all systems are going to fail. Do you think maybe it'll be a bit more of a longer slog for the US dollar?
Well, we're getting to the point where more and more people are realizing that there aren't any fixes. Nothing gets us back to normal from here. And there's an idea in the Austrian School of Economics called the crack-up boom, which is the point at which a critical mass of people realize that it's the official policy of their government to make their currency less valuable year after year, and they start acting accordingly by dumping the currency. So it's not that you have this giant increase in supply of the currency, it's that everyone loses faith in it all at once, and its value just evaporates. So I think we're headed for something like that with most of the major currencies. And so it's one of those, how did you go bankrupt? Well, slowly at first and then all at once, and there will come a time when we hit the all at once phase of this process. We don't know when that will be. But right now we're in the slowly but accelerating phase of the process. And it's completely possible that the right mistakes made by the world's central banks will get us there very quickly, get us to the all at once phase. But you can't really know that. What you can do is see that this is a process that is in place and position yourself so that you benefit from the all at once part when and if it happens. And you do that with, real assets, things that governments can't make more of on printing presses, electronic printing presses, like farmland and energy assets and gold and silver. Those are the kinds of things that, remember, we've had currency crises since the beginning of currencies. And in every single one, without exception, when the government screwed up its currency and the value of that currency plunged, gold, silver, farmland, and to the extent that there were energy assets back then, energy assets did well. They hold their value. So, you address this by moving into things that will hold their value because they can't be inflated away, and out of things that are the opposite. Bank accounts with a ton of cash in them, government bond funds that depend on their value for the value of the currency that they're paying you interest in. Bank stocks, because banks are basically just big bundles of financial assets. Get out of those things, get into real assets, and you'll tend to do very well in the period that's coming when currencies kind of fall into disrepute, fiat currencies. Plunge in value and have to be replaced by something else. So, this is something that can be totally managed by an individual who's paying attention and adjusting his finances accordingly. But I think it's going to catch 99% of the population off guard, unfortunately. And so the people who don't deserve to be punished by this are the ones who are going to be punished most seriously. The rich will be fine because they've got financial advisors who can tell them all this stuff. And, the relative handful of gold bugs and survivalists out there who see this coming and are already taking steps, those guys will be fine. And regular people will be blindsided and in a lot of cases see their financial lives destroyed.
Yeah, which is horrible to think. So from your perspective, when do you think it would be the right time to potentially start positioning into some of these more real assets? Like how would you know when to, sorry?
Well, 5 years ago was the right time to start positioning, so you should, if you're not doing it, you should be doing it now. And you should not be jumping in with both feet, but you should be doing maybe something called dollar cost averaging, where you allocate X amount of money each month for this transition. And then you buy that amount of money's worth of the things that you're moving into. And you just do it regularly. And that way, if there's some kind of a big stock market crash that pulls down the value of even real assets, you aren't, partially bankrupted by the fact that you jumped in with both feet right before the crash. And if there is a crash and things get really cheap, then your dollar cost averaging buys you more of that stuff at the bottom. And, do that regularly. And as this plays out, you'll be better and better positioned. And then when the all at once thing happens, you'll be in pretty good shape. But the key is to start now. Don't put that off. Yeah, there's a very good financial writer and analyst named Jim Rickards, who has this story he tells about his clients who say, Jim, so tell me right before the crash is going to happen, and then I'll jump in. And Jim will say, if I knew right when the crash was going to happen, I'd be on a yacht somewhere. But you can't know that. You cannot know the timing of this stuff. So all you can do is start moving in the direction of the ultimate destination, and then just hope that you've moved far enough by the time that it happens. Like I said, starting 5 years ago would have been better, but starting now is still okay. You can still make a lot of progress and protect yourself, at least to an extent, if you get going now.
Yeah, it's really interesting. Do you think there could be a risk that maybe similar to what we saw in the 30s, that I guess precious metals could be confiscated by the government, and maybe you're forced to sell them, and potentially you could say the same for other people, other assets that they would think would be good for the country?
I think there's a chance that pretty much everything will be confiscated. There's all kinds of confiscations that are possible. There are wealth taxes, and there are capital controls, and there are windfall profit taxes, and they're flat out just, we'll take this category of stuff away from you because we don't want you to have it. That's what happened in 1934, I think it was. The U.S. made private gold ownership illegal. And they told everybody to turn their gold in. Not very many people did, but the people who didn't became criminals because the law was the law. It was a stupid law, but if you disobey that kind of a law, you become criminal as defined by the government. So all of that stuff is possible, which means you need to diversify into several different categories of this stuff. Buy some gold and silver coins, have them on hand, assume that gold is more likely to be confiscated than silver. So maybe, overweight silver, underweight gold, if confiscation is a big concern of yours, and keep some of it in one place, some of it in another place, and buy stocks via a brokerage house, but not too much. Your IRA and your 401k is this big pot of money that governments are eyeing right now. They want to figure out how to get at that $3.7 trillion or whatever it is in the US. And there are lots of ways they can do it. So diversify among financial institutions where you keep your money. Maybe look overseas and have an account in a foreign bank. Swiss banks have been serving that purpose since the beginning of banking, and they might be something to look at now. And buy land, which is harder to confiscate. Actually, it's easier to tax but harder to confiscate. But that's part of the calculus too. So you want to build the idea that governments are going to go a little crazy and are going to start coming after various asset classes into your planning, and try to diversify as much as you can so that some things will survive even if other things get taken away. And I believe it's Thomas Sowell who says this, that there are no real solutions, there are only trade-offs. And that's how asset allocation works now. You're never going to have the perfect strategy that keeps everything intact when the governments of the world go completely crazy and you get to hold on to all of your wealth. What's going to happen is some of the things you try will work, some of them won't. And you need to look at the trade-offs between those different things. There's convenience versus safety versus anonymity. And those things are all good in their own way, and they all carry risks and hassles in their own way. So in putting together your strategy, you need to look at all of this stuff and come to a strategy that works for you. That's kind of what I'm doing on the Substack page that I run, is actionable stuff. Yeah, we all get that the world is going to hell, but what do you do about it? And how do you manage all of these trade-offs? So I'm publishing things that are designed to help with the thought process of figuring out how to manage the trade-offs. And it's been a fascinating process. I'm learning a lot as I go, and hopefully helping some people figure out how best to manage the complexity of what's coming.
Yeah, that's a great way to look at it. So what would you say is the best trade-off that someone can take?
Well, for instance, holding gold and silver coins on your premises or nearby, in a safe place, that's a little inconvenient, as opposed to sending some money to a storage service and having them store your gold for you. But it has an element of safety. So you're trading convenience for safety when you do something like that. And, the trade-off is different for each person, which of those you would rather choose. And do you want more gold or more silver? Those are things that have different pluses and minuses. There is no perfect answer, but you want to make the decision that works for you. And the same thing with investing. Do you want to keep all your money in a Charles Schwab brokerage account, or do you want to spread it out among 3 other brokers as a way of diversifying away from the risk that any one brokerage house is going to collapse because of some mistake they made or some government action or whatever? And it goes on and on. Each you can choose some asset classes that you want to move your money into, but with each of those, there are trade-offs and pluses and minuses that you have to work through too before you figure out how to specifically do the thing that you're going to do. We could spend an entire session here on just where you hide your gold and silver coins. That's a big topic of conversation, and it's a very interesting one. But that's just one thing out of many that you have to look at. So it's complicated, but safety is always complex. If you look at the concept of prepping, it sounds simple from the outside, but the more you dig into it, the more complicated it is. But you need to deal with this complexity. You need to figure out which of these things works for you and then do them correctly. So, it's fascinating. I think preppers are some of the happiest people that I know, because they've got a plan in place and they're pursuing this plan that they think is a good thing. So they're purposeful. And we should all be like that. We should all set up our plans and then pursue them on the assumption that we're doing good. We're protecting our families and we're taking steps to protect ourselves against some stuff that is clearly coming. So there are ways to do this, to live in this world, which is really not a happy world, and still be happy because you're making decisions that you think are the correct ones, and you're constantly learning new ways to do better. So, it's a shame we have to live through this piece of history, but there is a way to do it well and a way to do it badly, and we need to choose the correct way.
Yeah, it's a great message. As you said, you can almost apply that to anything in life, being more strategic in your actions. If we maybe go in after this crisis occurs, this implosion, hopefully people have been able to protect wealth as best they can. What do you think the next system would be? Would it be a sort of, as you mentioned there, brick, a commodity sort of weighted currency? Do you think it'd go back to Bretton Woods 2.0? Obviously CBDCs might come into play as well. What's your opinions on that?
Well, that's going to be a very interesting debate when the time comes, because there are a lot of different ideas about the next monetary system, the next financial system, the next economic system. And we could end up with a socialist or a dictatorship very easily if half the population that seems to love that kind of stuff ends up winning the debate. Or we could go all the way back to, and I'm speaking of the US right now. I can't speak for other countries, but we were founded on a premise, a platform of limited government and individual freedom and sound money. And in the Constitution, there's a clause that says money is gold and silver. So we could go back to something like that, where we go back to a serious gold standard that limits the ability of government to take on new debt, and a constitutionally limited government in which individual freedom is paramount. We could go back there. I think that would be too much to hope for. But those are the two ends of the spectrum. I think we could fall to authoritarianism because we blame the system as it is now. So let's say we blame capitalism, therefore we go socialist, or we blame big governments and we go to some kind of a dictatorship that is an even bigger government, because we just didn't get the big government thing right this time around. That's all possible. And I think the simplest solution would be that on some Sunday night in the not too distant future, the government just announces that henceforth the US dollar is just a name for 1/10,000th of an ounce of gold. And the government will be banned from borrowing any money in the future. We could announce that, have that burst of inflation that would imply, and then go forward from there with a totally sustainable monetary system. I don't think they'll do that, because I think that's giving up too much power on the part of people who are drunk on power right now. But I certainly think some variation of that is in the realm of possibility. And in any of these things that I just sketched out, gold, silver, farmland, and other things like that become much more valuable during the debate. When it looks like we're going in any of these directions, you still want to own real assets. So we can't know what the form of the new monetary system will be. We can't know exactly how we get there, but we know that it's bad for today's fiat currencies. The monetary reset is premised on today's fiat currencies losing most or all of their value. So we know that that's the process that we're going to take to get there. And then once we're there, preparing for that, we should be educating ourselves about what money is and how government should work, and what individual freedom versus collective responsibility, what that actually means in the real world, so that we can participate in the debate when the time comes, and maybe in our own way skew it a little bit in the direction that we think is the best direction to go. So that's another thing that can be a positive plan to carry out. In other words, educate yourself. Be ready when you're going to debate monetary issues with people who have really divergent views. Be ready to hold your own. And there are lots of educational resources out there for that. And I think this show is one of them. That allows people to quickly get up to speed on how this stuff should work, and to be able to, marshal a coherent argument when the time comes.
Yeah, it's a great message. So, John, thanks again for your time. I really appreciate it. So, I guess my last question is, what is one message you'd like people to take away from our conversation?
Well, it's to get going. The time is limited now. I think I don't think we have 20 years anymore to get ready. And I'm publishing a Substack page, which is rubino.substack.com, which covers a lot of this stuff, and is coming to contain investment portfolios that might do well in what's coming. So it's an investment site that is becoming a bigger and bigger database of stuff like that.
Yeah, it's great. And as you said, it's all about education. And, you might not like what we are saying, but it's just actually looking and then learning more. And then from there, you can come to your own decision, basically. But yeah, John, thanks again. I really appreciate it. So you've mentioned the Substack. I think you mentioned you have a Twitter as well. Are those the best places people can find your work?
Yeah, well, no Twitter yet.
Oh,
That's
no,
coming.
sorry,
I'll set that up
sorry.
pretty soon. Yeah, so it'll just be the Substack, and then the Twitter that's on my to-do list for the next few months.
Yeah, that's where all the fintech people, all the finance people are now.
Yeah.
But yeah, John, thanks again.
Thanks, Anthony.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.